No need to honk. The road seems clear ahead for the automobile sector in Q1 FY27. But what about the macroeconomic factors affecting the markets in general? Let's hit the brakes to reflect. Hi, I'm Dhruv Joshi, research analyst at Mirae Asset Sharekhan, and it's time to cruise into the quarterly results preview for this sector. Fasten your seatbelts till the end of our expert view and valuations. First of all, revenue growth for our coverage universe has grown at an estimated rate of over 20% in Q1 FY27. This is due to two key factors: demand post GST 2.0 rate rationalization, lower borrowing costs. These have lifted affordability and boosted first-time buyer demand. On the other hand, a sharp increase in steel, aluminium, copper, PGM, and natural rubber prices since the last quarter had undermined EBITDA margins to an extent. Price hikes in the Q1 FY27 have only partly offset the input cost inflation, but this is expected to ease further in the coming quarters. Among subsectors, two-wheelers are expected to hit the cleanest strokes with growth in revenue and profit after tax. This is aided by the following key factors: robust domestic retail volumes, premiumization, particularly in the case of Royal Enfield, and a healthy export mix. Alongside two-wheelers, tractors have benefited the most from the GST-led affordability incentives, while heavier commercial vehicles and premium and luxury vehicles were more directly impacted from the decline in margins. Passenger vehicles signal more ambiguous trends. Maruti Suzuki's revenue is expected to grow 35% year-on-year and resilient domestic demand, strong exports, and scaled capacity, but PAT to fall by 19% year-on-year as margins were squeezed to just under 6%. M&M's auto and tractor combined to grow a healthy 22% year-on-year, with PAT roughly flat as price hikes and premiumization only partly cushioned cost inflation. Tata Motors' consolidated numbers continue to be distorted by Jaguar Land Rover, which is still absorbing the fallout from last year's cyber attack, incremental US tariffs, a soft Chinese luxury market, and elevated warranty costs. JLR has guided to just a 4% FY27 EBIT margin, keeping TMPV's reported PAT down 97.5% year-on-year this quarter, well below the domestic PV business. Commercial vehicles show a similar pattern too. Ashok Leyland's revenue is expected to grow 11% year-on-year, but PAT to drop 10% year-on-year on weak MNHCV bus volumes and margin contraction, while TMCV's revenue growth is expected at 25% year-on-year, but PAT is expected to slip 9% year-on-year as West Asia-linked cost pressures outweigh price actions. Commodity inflation remains a key macroeconomic headwind for the sector. Passenger vehicles and two-wheeler makers are more exposed to aluminium, copper, and PGM inflation, while CV and tractor makers to see a bigger hit from steel and rubber, which have stayed comparatively firm. With these factors in place, here's our outlook and valuation for the sector. Ancillary companies broadly track the OEM trend, delivering strong double-digit revenue growth but facing pressure in profitability. In our coverage universe, EBITDA margins contracted for Apollo Tyres, Schaeffler, and Sundaram Fasteners due to the input cost inflations mentioned. In sharp contrast, Lumax Auto and CIE Automotive outperformed due to the traction in the new segment and favorable currency movements. The key factors to watch out for: progress of the monsoon, its impact on rural demand, aluminium and copper price trends for PVs and two-wheelers, and sustainability on the festive season demand in H2 FY27 once the GST cut benefits effect fades. Our outlook on the automobiles is constructive while acknowledging near-term earnings volatility. That's all from our end for our quarterly results preview for the automobile sector. What are your views on the same? Share them in the comments section. You can now access our in-depth reports for this and other sectors on a real-time basis by joining the WhatsApp channel for Mirae Asset Sharekhan Research Center. The link is in the description. Alternatively, you can also type research.sharekhan.com to get started. Stay tuned for more results preview for the other sectors, and thank you for watching.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.